Your credit limit is not a safety net, it's a trap. That sounds counterintuitive, but having more available credit than you need does not actually make you stronger. In fact, it can make you feel weaker, and banks notice it more than you realize. Credit is borrowed money, not your money. Every dollar of the available credit is a future obligation waiting to be paid, even if you never use it. When banks look at your file, they don't just see what you owe, they look at the total exposure. That includes all your credit cards, all the line of credits, any other available revolving debt. So having more available credit can make you feel riskier to the bank. Let's make it concrete. Imagine a person who's making $50,000 a year with $30,000 of unsecured credit available. On paper, everything looks fine, income is decent, repayment history is fine, but from the bank's perspective, this person has 60% of their annual income sitting there as a potential debt. If something goes wrong, job loss, bills, emergency, they potentially see $30,000 being drawn as a debt. And that makes it a huge risk. They don't just see that there is a zero balance right now. Unfortunately, even responsible use doesn't protect you from being seen as risk in that situation. Having more credit can feel safe because you can cover emergencies or buy something that you want to buy, but here's a hidden danger. You're more likely to spend if you have available credit. You're also carrying a shadow obligation in the lender's eyes. The scary part is, life is not always predictable. Just imagine making $50,000 a year, having $30,000 of available credit, and God forbid something goes south. Because if it does, that available credit balance is gonna start going up. And then one emergency, one missed paycheck, and all that available credit can destroy your stability overnight. Whether you pay on time is not the only thing that banks ask. They also ask, what if something goes wrong tomorrow? What will happen? Having a high available line of credit counts as a potential liability, not just unused debt. Even with a zero balance, banks see ability to draw suddenly $30,000, ratio of credit to income, and how exposed can you possibly become. Here's a bit of an emotional insight. Having lots of credit can feel empowering, but that sense of power is false security. It can tempt you to spend, erode your discipline, limit your real flexibility, and put you in the position where an unexpected event can suddenly spiral. Real strength is not about the size of your credit line. It is knowing exactly what you truly need, keeping limits manageable, and protecting your future options. When you control credit and not have credit control you, that's when you start building real stability and growth. Credit can be a fantastic tool, but too much is a trap. Manage it wisely and your life becomes stronger, safer, and lighter.